bring on board Hemang Jani as well, who's joining in on the show. Hemang, good to have you on board. Thanks so much for joining in. It's pretty interesting, getting into some data with respect to air travel and how it's nearly at, the pre-COVID levels that we've seen. And of course, if you go to the airport at any point in time, the crowds really speak for themselves. Just capitalizing on this theme of travel, hospitality, the government of India focusing a lot on domestic tourism. How do you want to play that from a stock market perspective?
Good morning, Avan. I think the entire tourism theme has played out so very well in the last 1.5 years. And what is very interesting is that there is no slowdown or any kind of a moderation in the expectation when it comes to the hotels or the airlines. And I think the event at Ayodhya again is adding to the fervor, and we think that overall that theme will continue to be good. Now, how do you play this theme? I think hotels continue to be at the center stage of this, and lemon tree Indian hotels are the names that we like. Aviation, apart from the fact that the air traffic growth has been good, I think international routes and the price having corrected from the top has played in terms of positive triggers. So Indigo, and to some extent for those who are looking for a little bit of high beta play, I think SpiceJet provides a good entry point with a low market cap. 2 rounds of fundraise has happened, which will surely help. So I think overall this theme will remain extremely good even for 2024.
Were you rubbing your eyes with disbelief, Hemang Jani, when you saw that move in Reliance? Aisa kya ho gaya? Suddenly 60-70 rupees higher. Are we missing on something, or this is just a technical breakout?
Nikunj, Reliance has actually not participated in a meaningful way in this entire rally. So you will see at some point kind of catch up happen. Also, this being a stock with a very high weight on the index, sometimes, on let's say expiry days, it has its. I think from a purely valuation perspective and even the incremental, growth drivers in terms of, the geo, the ARPU increase, the oil, vertical starting to really deliver good numbers from here on, I think will surely help. So as an investment, I would surely look out for some of the large caps, and within that, Reliance will surely feature.
So what should one do then? Just let's say move 5-7% portfolio to Reliance. Do you think it's a good idea in the large cap stocks? Maybe sell some defense names, maybe sell some railway stocks and just move into this large cap stock now, Hemang?
Because it's always going to be tricky when you try to, sell some of the best performing mid cap, small cap companies. Though in terms of valuations, one does get a sense that they are kind of in a bubble zone. But I think it would be surely sensible to really move into either some of the, let's say, large cap names which have not performed, or some of the defensive names, be it pharma, to some extent NBFC, which has been a sector which has really not done that well. Surely it will make sense. Maybe a 10-15% increase in allocation to large caps would surely be a sensible thing to do at this point.
I'm just going to shift from Reliance and move to some other stocks where there was a lot of volume action yesterday. And one stock, Kunal, which is popping out is NCC.
Yeah, Nikunj, and I think it's done exceptionally well. So, NCC was a stock which I remember very clearly, I think was stuck at 66, 67 for years. I think the 2007-8 high for the stock was around this levels. In the recent high, the stock was at a point where it failed to break out that 66, 70 odd mark for itself. But the moment the stock touched the 3-digit levels, we've actually seen NCC going into a strong trending stock. You've seen volumes being very consistent. It's not that the stock has seen an abrupt change in terms of volumes, but the volumes have been very consistent whenever the stock has moved up higher. What I also like about the stock is the beta nature of the stock, which has changed dramatically. NCC was considered to be a very high beta stock over the last many years. The stock used to move into gyrations of more than 15-20% in just a matter of few days. both on the upside as well as on the downside. That's now abated for the stock. We've seen the stock graduating into a very slow, consistent mover. Whenever the stock wants to get into a or gets into an overbought phase, it spends more time, consolidates more rather than gets into a major price correction. I think that's a hallmark or a quality for a stock which is moving into a next level of uptrend. I would believe that the stock should continue to move up high in such a consistent manner. Wouldn't be surprised that in the next couple of years, even the stock touches levels of 250, 300 plus also.
Again, just zipping through some stocks where price action was large or there were any breakdowns, just for the benefit of our viewers. And Naresh, one stock which Kunal likes but has gone below its 200 DMA, and that's Aditya Birla Capital.
So, AV Capital, if you look at the chart, it has been a slow and steady downtrend over the last 5-6 months. Made a bottoming out formation and has come to the upper end of the channel. So, in this channel, if it sustains about 180, that would be a breakout. So, for now, it's a preemptive buy wherein you expect that breakout to take place and the bottom is already done. So, one would keep a stop loss around 165. But I would be more comfortable buying on the way up about 180. Because the longer term trend has been positive. The stock crossed above this 160 mark, which was last seen in 2018-19 levels. So out there, the trend is positive and we are seeing a good trend across the whole space as such. So out there, watching out for a sustained move above 180 to take a confirmation.
Okay, there you have it. That's the view coming in on some of those movers in trade. Meantime, Hemang, let's also get in your outlook on what the outlook is when it comes to the entire NBFC pocket. Owing to the kind of positive brokerage notes that we've been getting, is the sector in a sweet spot, more upside?
I think, Aman, ever since the RBI came out with the higher risk weights, and particularly for the unsecured loan, there was a nudge to slow down. I think from there on, we've seen a bit of an underperformance. But now things are stabilizing. So for some of the companies where the quarterly earning expectations are very strong, we should surely look to participate in those names. So Poonawalla FinCorp is something that we've been liking, and we think that this quarter company will report about 30 to 35% kind of a growth in terms of top line and even post-provisioning net profit. So selectively, we would surely be looking to add into the NBFC space. LIC Housing is another stock which would deliver very strong quarterly numbers. Overall, we continue to be very selective, but these two names will deliver good, strong growth in this quarter.
There you have it. That's the view coming in from on some of those NBFCs in trade. Meantime, it's apart from Reliance Industries as well. In yesterday's trade, you did see quite a bit of contribution coming in from some of the other heavyweights in the session. But wanted to, Hemang, get in your thoughts just how you're placing yourself within the mid caps versus the large cap stocks for the year ahead. Do you believe that some of those large caps that have been lagging are only going to take leadership, or that it continues to be a strong game ahead for the mid caps?
I think mid caps, surely the trend is still intact. The retail money is flowing through, and that will help. Only thing is that one needs to be a little selective, and rather than chasing some of the momentum stocks, we'll have to do a little bit more work in terms of where the value is or where the growth potential is better. But from a risk reward perspective, incremental money, I surely think that we should, put into large caps. Let's say banks where the valuation comfort is very much there. The numbers are looking quite good for this quarter. So I think, it would surely make sense if you want to have a peace of mind, go with larger component of the large caps.
Okay, there you have it. That's a view coming in on some of those stocks. Meantime, Naresh, let's understand your outlook on some of the auto majors. What's the view on Tata Motors, given the kind of trend that we've seen, a Bajaj Auto, M&M?
So, something like a Tata Motors and Bajaj Auto are overdone in the near term because the momentum has been strong. It's been a slow and steady move across the board over the last 6 months. So, if you look at Tata Motors, it gave a breakout around 450 6 to 8 months back. The stock has almost come to double. So at current levels, you want to keep a trailing stop loss and ride on to the position. So for now, a trailing stop loss for Tata Motors would come closer to 770. and continue to ride on to the position. Same with Bajaj Auto. The only case with Bajaj Auto is the fact that it came out with a big buyback announcement and the price action topped out around that area. So that's generally an indication that a short-term top is in place and we could go sideways. So out here, the only play in say the whole auto pack is Maruti, which has been the most sluggish one. The stock gave a breakout about 10,000 and still quoting around 10,000 levels. So in terms of risk reward, the best bet right now is Maruti.
Okay, let's get a move on then, and also getting a check from you, Hemang, as to what the outlook is from the pharma sector. Just a short while ago, my colleague Vamakshi was, highlighting some of the trends as well coming in. That December has been a fairly healthy month. Where is it that you're seeing, growth within the entire pharma space? What are the stocks that you would be betting on?
Pharma has seen a very strong rebound, and the incremental data from the US markets are also suggesting that the pricing has stabilized. Domestic market, we continue to see reasonably decent growth. So we would go with the large cap, something like Cipla and Sun Pharma and Dr. Reddy's, where the regulatory issues more or less are now behind them. And within the mid caps, we would surely look at Laurus Labs because this API, we are seeing stability, we are seeing incremental volume coming through. So surely some of the API-based companies, be it Aurobindo Pharma or Laurus Labs, surely we would have a positive bias there.
Okay, Hemang, we let you go on that note. Thanks as always for taking the time out and joining in. Let's